Hey everyone, welcome. Hey Tim, hey C Fazio. Well, just as a reminder, there are people out there using my name, my voice, my likeness to try to scam people. So if you're supposedly hearing from me and it's not from this YouTube channel or from directly from my only public Telegram channel at thetradingpub.com/Kane, then it is absolutely not from me. I'm not sending you emails. I'm not sending you direct messages on any platform whatsoever. I'm not asking for crypto. I'm not asking to invest your money for you. That is not me. So please don't fall for it. Be aware, be careful. And all I do is put out this content or I'm on a webinar promoting one of my products. So I'll never ask you for money directly or to invest any of your money. So, and I'm just noticing that I need to change the screen resolution. So let me do that real fast. Hey Tim, hey C Fazio, hey Lise, and hi Spider Monkey. Tennessee, where's Columbia, Tennessee? Where exactly? I was born in Tullahoma, actually. A lot of people don't know that. I was born a Southern boy. All right. So, okay, so let's see what happened in the market today. I can see here that we did come down, but on the daily time frame, it's not that bad, right? This is really just continued chop sideways. Maybe you could call that, okay, pulled back to the EMA8, but really EMA8 wasn't really that far down. And you can see that we're basically at the previous all-time high right here. So it would be very natural for it to chop sideways over here, or sorry, hit resistance right here, but it could continue and go down to that EMA20. There's nothing to prevent that, or if it is a deeper sell-off, then maybe to this VWAP right here, which is the quarter to date, yeah, or the last expiration triple witching VWAP, which is pretty much the same as the quarter to date VWAP. So it would, and that's pretty much the same as the MA50. So we're not really expecting bearishness to come into the market, but this is just a short-term temporary either chop sideways or pull back. That brings me back to the previous commentary where we said that we'd probably chop inside of a range right here. But in any case, it doesn't really matter exactly how it happens. What matters is the market is still in a bull run, and we're just seeing temporary pause over here, which is appropriate. This has been a huge run up with just a couple of very minor pullbacks here. So continued pullbacks is very appropriate, and it's nothing to get a little crazy about. The only reason why some people were freaking out is because if you go into a very myopic one-day view, it looks like it really sold off. Right? You can say, "Oh my gosh, that is quite directional." Once we got past a couple of hours in, or 1 hour in, we flipped around from positive to negative. So often the first direction is wrong. We went over that before in the past. When we get a directional move, this chop, chop, chop. So I can't really say that. So here, initial negative, and then we went positive. Okay, and then here, initial negative, then we went positive, but then we flip back to negative. And this one stayed positive. It did try to flip around, but it stayed positive. But a lot of times that initial move went up and then went down. And that's a very, very common pattern. It's actually more common than just moving upward in a single direction or downward in a single direction. So this is nothing unusual. This move was not extreme at all. If we look on a daily basis, that move is just down 0.5%. Nothing major at all. It is perfectly normal for the S&P to move about 1% on a given day. So don't freak out. We're still bullish. We're still right near that EMA8. It could decide to bounce from there tomorrow, or it could go down a little further. Now, I personally believe that it will go a little bit further because of what's going on in the VIX. So we didn't really see anything kind of trigger this. This was basically just the natural movement of the markets. And yes, we are below that EMA8 now, but we're still above that EMA20. And we're not that far below the EMA8. It could just bounce tomorrow, But again, I'm personally expecting it to go down a little bit more because of the volatility. So we've talked about how, that's not helpful. Let's look at it on a daily basis. Last week, we did talk about how we did poke below that 15 level, which we thought it was unusual, and that it was most likely going to go back. And not necessarily all the way back up to 20, but back up to maybe 16, 17, 18. And I still believe that's the case. Now, I didn't think it would happen this week because there's very few catalysts this week. But what I didn't realize was that there's VIX options expiration, which is tomorrow morning. But your last opportunity, they're European style. So the last opportunity for you to trade out of them was a few minutes ago, half an hour ago at the session close. And tomorrow morning, after a half an hour, that's the official expiration. But you can't trade in and out. You just have to hold on to your option and see whether it's in the money or out of the money. Now, we closed over here at 1558. There was a very large, to refer to the Telegram channel, I showed you guys this large, I guess it's barely bigger, this large concentration of negative gamma at 16. What does negative gamma mean? Negative gamma means that we expect runs, not pullbacks. So if we hit 16, we expect it to run towards 16 or and perhaps keep on running. So that's one reason why I believe that VIX could continue to go higher. And then all of that expiring options, people are going to place or roll their options, maybe not all of them, but a large percentage will be rolled into a future expiration. So we'll need to know where that gets rolled. Does it get rolled into 15, 14, 13, or does it get rolled into 17, 18, 19, 20, or maybe even higher? So depending on how that lands, then that'll influence where VIX will go next. But given that we are so low in this general region right here, and we've been in that region for at least mostly in that region since May, and actually mostly since 2025, all of 2025. There's just a little bit of movement over here because of Liberation Day. But this region has been mostly where VIX has been for most of the year. So here, I don't expect it to go down. The last time we were down over here was December of 2024. We haven't seen a regime where we were below 15 all year, and I don't expect it to happen now. There's just not, we keep hitting all-time highs, and all those all-time highs were all done in the 15 to 20 regime. So I'm not expecting a continued upward movement with even less volatility than what we had. So I am expecting this to spike up. I do believe that the rolls will go into higher strikes. So that will potentially cause VIX doesn't have to happen tomorrow, but just because we rolled into a higher strike doesn't mean we immediately react and then it pops upwards. But it is the beginning potentially of a move up towards 20 again. And if we move up towards 20 again, then that would be a wild pullback into S&P. So just like this one, moved up to 20, right? This was July 31st, August 1st. So if we go to July 31st, August 1st, that was this move right here. It's the pull back to this VWAP right here. So we could do a very similar thing down to the EMA20 or down to that VWAP right there, which at this point in time is basically the same level as the MA50. So it's a very difficult time to choose positions because you don't want to go on long if there's such a high potential for it to pull back. And shorts aren't really appropriate. It would be against the trend. So we would really have to look for sectors and stocks that are really not moving in correlation with the markets and exhibiting their own little bubble. So we could look for those in just a moment, but I don't know how many we're going to find because we've been chopping sideways. There's probably not a lot of candidates that are clearly in a downtrend. But we will take a look at that very carefully. Let's see, Fozzie, how do I pronounce my last name? Shay. It's kind of like S-H-A-Y, Shay. Yeah. Near Franklin. Okay, near Franklin, Tennessee. Cool. So yesterday I also made a comment where, oh, maybe we'll look for an earnings trade based off of HD, and then I completely forgot. It'd be meaningless for me to find an earnings trade for you because you can't trade, you can't take advantage of it. Lowe's is, by the time you have a chance to put in an order, Lowe's will already have reported earnings. So, and then it wasn't really appropriate for me to do it yesterday either, because on the earnings trade, you want to make it as close to the close as possible. In any case, Home Depot went up it's 3%, not really all that much. So let's see how much. I can't see how much they were projected to move anymore. I should have done that yesterday. But let's see how much Lowe's is projected, at least so far. There might not even be much of a volatility crunch. Yeah, a tiny bit. It's not a huge volatility crush. Okay, but about 10 points, about 9.5 to 10 points is what we're looking at. So 9.5 or 10, and it's trading at 256. It closed at 256.36, so about 3.7%. Home Depot moved 3.17%. So you would just expect that Lowe's probably will move within a mild range as well. It would probably stay within the market maker's expected move. And therefore, I would be doing a maybe, depending on what you could get for maybe a butterfly or iron condor. I tend to favor butterflies because the iron condor, the reward risk ratio is probably not going to be that great, given that we're projecting that it's going to stay within the expected move. And then, or you could just do one side of it and just do a vertical spread. But in any case, I think what we'll do instead is I want to see if there's any trending sectors or stocks that are trending clearly on its own to the downside. And then we've got some pretty cool updates in the Gamma software. We can look for some Gamma opportunities. So this is the latest version of the Gamma software. It now has a scanner to it, and we're still working out some of the kinks in the scanner. It is a little slow at the moment, so we're trying to speed it up. And let me try running that, see if we can get something off of it. You can see it takes like 20 minutes, an hour sometimes. So we're trying to speed that up. But if not, I can go with the latest scan, latest completed scan, which is, I don't know what time zone this is in. At least a few hours ago, minimum a few hours ago. So it should be reasonably okay data. I don't think most of the stocks made a huge move towards the end. Now, before we do that, let me not forget, there's a very important potential divergence happening in mags versus everything else. So you see we're down 0.5% on SPY. If I look at the mags, mags. Mags was down 1.62%. That's 3 times as much as the SPY. If I look at SMH, that's down 2%. So that's 4 times as much. So, and we're already below the EMA20 on the SMH, and we are not quite below. So this is looking similar to the SPY in terms of location on the moving averages. So if we get a breakdown in SMH and we get a breakdown in QQQ, because that's sitting right at that EMA20, then we are probably it's going to increase the likelihood that that SPY will actually visit below the EMA20, the closer to that MA50 level. So we'll want to watch that very carefully. What's interesting though right now is that the RSP, the eco weighted SPY, is actually up today. right, is up 0.5%. So there's that divergence between the Mag 7s. So the drop in S&P 500 was due to the pullback in the Mag 7s. So a lot of other stocks are still doing well. So actually, if we avoid the Mag 7, if we avoid chip stocks, if we avoid QQQ stocks, then we can potentially still find pullback opportunities to go to the long side in bullish sectors, in non-tech related sectors, and probably not retail because we have a lot of retail showing earnings this week. So let's take a look at that first, actually, because at least we're still going with the trend of the overall market. And let's take a quick look at Dow Jones. Let's see how that did. Flat. And then how about IWM? IWM down, but 0.77%. So not as much as the MAGs or SMH. So that's really interesting to note. Also in my Telegram channel, I noted that the major, so we have Apple. Okay, Apple was down, but only 0.4%. So what that tells me is that not all the MAGs are moving together. There's a couple of specific MAGs that are causing the market to pull back. So let's look at Amazon. Okay, Amazon is down 1.5%. So Amazon, yes, but all it did was come to its EMA8. So I'm not too concerned about Amazon. Then we've got Google. Google, all it did was come back to its EMA8. Still looks like a very strong uptrend. So is it Netflix? Netflix looking weaker, right? So weaker than those other two. So Netflix is a concern, down 2.5%. Is Netflix one of the MAGs? What are the Mag 7 stocks? Microsoft, Meta, Tesla, Nvidia. So Netflix wasn't included in that. So let's look at Tesla. Tesla down 1.75%, but coming to its MA200. So I'm not terribly concerned about Tesla. It's got a lot of resistance to go through or support to go through if it's going to break downwards. Nvidia broke below its EMA. So here we go. So this is where we start to see the influence on SMH. And this is a major problem for the MAGs, also down 3.5%. And we also saw Microsoft. So sorry, let's go back to Nvidia. Cross below its EMA20. Okay, so that's spelling a little bit of trouble. And then we'll look at Microsoft. Okay, Microsoft also crossed below its EMA20, but not only that, it has the EMA8 curving way down, the EMA20 also curving down. So that's not looking very good for Microsoft at all. And then we also have Meta. How much did we lose on Microsoft? 1.5%. And then Meta down 2%, crossing below its EMA20 as well. And that EMA8 is curving down. And then on Nvidia, also curving down. But Microsoft, you can see that they've curved down so much that they're about to cross each other. So I'm much more concerned about Microsoft than I am about the others. But Nvidia is definitely not looking great. It's going to have to bounce up here pretty quickly. Otherwise, we're probably going down into this area over here. And then Meta, same thing. It's got to bounce pretty quickly. The good news on Meta is it does have that support right there, that previous all-time high right there. Is that all-time high? Yeah, previous all-time high. So it did touch that level and back off of it a little bit. So Meta, not quite as concerned, but those are the 3 weak links. Meta, the stronger of those three, and then Nvidia, the second best, and then Microsoft, the worst. So I'm going to be watching those three specifically very carefully because those are the things that drag down the Mag 7. The Mag 7 are the ones that drag down the SPY or SPX today. So we want to be very, very careful of those. And those are Microsoft, AI Tech, Nvidia, AI Tech, and then Meta, AI. And they also announced that they went on this huge hiring spree, spending billions of dollars to acquire AI talent. And now they just announced that they're going to probably let go of a bunch of those guys. So yeah, restructuring its AI organization, fourth restructuring of its AI organization in the last 6 months, but this time it's going to be letting go of people. So they can't seem to make up their minds over there. Not great news, not a good look, does not inspire a lot of confidence from investors if they're going to waffle back and forth, spend billions of dollars and go, oops, never mind, let me not go in that direction anymore. So Meta, we'll see. We'll see if investors get confidence back. But it's not a good look at all for Meta. Let me see. I always lose my chat. Okay. RSP did pretty well, all things considered. Yeah, RSP, not bad at all. You see, it's just chopping sideways. That EMA8 is still going up. It's still separating from the EMA20. RSP looks good. There's zero concerns about RSP at this point in time. Hi, Kay. It might as well be along with AVGO at this time. Let's take a look at AVGO. Yeah, there you go. So probably all chips related stuff is going to look like this because SMH pretty much looks like that. Not as extreme as we saw in NVIDIA or AVGO. But let's take a look at AMD. See, that looks the same. TSM, that looks the same or worse because we're below that VWAP already, very close to the MA50. So chips definitely did not do very well today and not looking good in the 1 to 2 weeks. I wish I was paying attention to mags today. I lost on XSP 2 days in a row. Yeah, it happens. It happens. So just remember, I did get a few emails from people or messages from people. Oh, my portfolio is down a lot this last week or the last 2 weeks. Remember that there's a season in everything, even in your portfolio, even if you're diversifying your portfolio with different strategies, everything's going to have a season. There are going to be little pullbacks. So don't get those pullbacks, let those pullbacks get you down. If you are in good systems and that are profitable systems that are based on an edge that still exists in the market, right? We have to make sure that our system is still applicable to the market that we're in. Sort of like yesterday, we were talking about altcoin, and we can't expect a mean reversion or the relationship between altcoin and Bitcoin to revert anymore. We can't expect those things to converge again because we are now in a different environment. Well, is your system still good for the market environment? If the answer is yes, if that edge is still in place, then there's nothing to worry about. Then a drawdown is actually a reason to get really excited because your portfolio should look something like this. It goes up, it pulls back, and what happens after it pulls back? Bam, it hits new highs. That's the way it should look. It should just like an uptrend in any given stock. So get excited. When you get a pullback, that's an opportunity. That's time for it to launch again, to move upwards. So don't get down, don't get dejected. Don't say, oh, I'm not going to trade anymore. Oh, I'm so upset, because then you're going to miss that bounce opportunity. You're going to go sideways or down when it could have gone up quite a bit. So as long as your systems are good and they maintain that edge, the original premise that they were based on, then everything is great. Just keep on trading through it, because you don't know exactly which trades are going to win and which trades are going to lose. You don't know exactly when it's going to turn around. So you can't say, oh, I'll just stop trading until it's time for it to turn around again. We don't know when that is. So you just have to keep trading through it and just anticipate and look forward to when it bounces again, because your positive expectation based on the statistics of the system, not because of fantasy land, but because of the soundness of your system and the soundness of your edge, dictate that it should bounce and go even higher. Okay, so don't get too down by just a couple of days or a couple of weeks of drawdown. IAK is counter trending the market nicely, maybe pullback opportunities there. Yeah, is that insurance? Okay, yeah, did quite well today. We can look at some insurance. Just in a lot of noisy chop over here. But we can take a look at insurance. Okay. And then let's go here. Let me see. Did this scan work? No, failed to start. I'll try again. If not, I'll use that old scan. All right. So let's take a look at our sectors. Oh no, that's what it was doing yesterday. Stock fetcher. Okay, we'll have to do it this way then. Okay, top stocks today or sectors today: real estate, home builders, insurance. Okay, there you go, cosmic spiral. Insurance, transportation, XLP. Okay, and then how about 1 week? Solar, iClean, that was what we saw from yesterday. But transportation, insurance, home builders. Okay, so look at that, transportation, insurance, home builders. We got 3 great sector candidates right there. So I'm going to do insurance, IYT, and home builders. And let's look at some really terrible sectors. Okay, nuclear. Well, that's interesting. So money looks like some profit taking in nuclear, in blockchain, in software, in metals, and in SMH. But that's really short term. I shouldn't be looking this short term. Let's do bottom over here and bottom over here as well. I might as well go a little longer. Nuclear, food and beverage. What is that? Shipping, defense. Defense makes sense if we're anticipating that war could be ending. Utilities because of uranium or nuclear. Same thing over here, commodities, software, cloud computing, commodities, energy, uranium, pharmaceutical. So I'm going to keep uranium, and I'm going to look at ITA and DBC. Okay. All right, and I got results from that scanner, or at least partial results. Okay, so we'll take a look at that after I finish this sector stuff. So let's take a quick look at, we already looked at IAK, looks like at IYT. IYT is looking great. It could hit some resistance right here, but for now it's looking okay. And then home builders. Oh, that's really strong. I wish I had seen it over here. A breakout, pulled back, so false breakout, pulled back, rebroke out, hit that EMA8, and then so basically breakout right here. Home builders is looking strong. So this is probably an anticipation of a rate cut. Let's see if the Fed watch moved at all. $84, about the same as yesterday. Not too much. Okay, but home builders are moving on those interest rates. Let's take a look at URA. Ooh, broke that MA50 really strongly. Okay. ITA. Not yet. And DBC. DBC, bearish, below EMA200. Okay. So let's look at those areas specifically. And yeah, I didn't get full results from that scan. Looks like only from A's. So let's use an old scan. And let's look at some constituents of URA and DBC, and also IAK, IYT, and XHB. OKLO, UEC, SMR at the MA50, so we're going to avoid that for now. At an area of support, avoid that for now. LEU at horizontal support. So we might have missed the move. It did move a lot today, so we might have missed the move. SMR, area of support, plus MA90. Okay, so not a great time to enter nuclear. If we were going to do that, it would have been intraday today. DBC. Let's see. Oh, DBC might not actually have stocks to work with. Yeah. Futures. Okay, so this would be an ETF play at support, not super strong support, but support. So this would be something we would watch carefully tomorrow. If it continues to break down, then this would be a short. So I'm not going to look for specific options on that right now. But this is going to go, this should go on my watch list, or actually even an alert. So DBC, if it crosses below 21.5. Okay. All right, so we'll look at longs, IAK, PGR, CB, Travelers, Allstate. Not yet. It's Chubb, Travelers, maybe Travelers, Allstate. These two might even be a Maverick or Quantex. Let's check Maverick. Wrong Maverick. Travelers. Yeah. Maverick likes Travelers. A little flat, but it's looking okay, actually. Allstate. Already would have taken profit. It was single day trade. That would have been a nice little quick trade. So Travelers, potentially. And then Aflac, Prudential, Met. Ooh, Aflac, breakout move. Prudential, nope. Met, nope. Hartford, nice little, this could be a Maverick also. HIG. Nope, took profit on it already. Nice move right there. Yesterday, today. Man, that would have been a great trade yesterday and today exit. That would have been at least a 50% or a gain on an option. And that's probably low enough. AIG, WRB, L. L already moved. Oh, WRB is interesting because it's just breaking out from all of those moving averages. This might WRB. Yeah, Maverick likes this one too. Looks like we got some good insurance candidates. I don't even know if I should keep looking. IYT. Uber, UNP, UAL. Uber, yeah, would have been great over here. It's probably not too late though. You could probably still catch a move. I'll put it on my list in case we can find something in gamma. UAL. No. UNP. Get some railways in here. Nope. DAL. Too late for that one. CSX. It's actually looking pretty good. That's a nice trend right there. And it broke out of that MA200 and it never pulled back. It just kept on going and just EMA20, EMA20, EMA20. And then it did break above this resistance. It basically closed right at resistance. It did break out and pull back, but it closed basically right at resistance. Nice green, huge green candle right here. See, it's like this is real also, huh? Yeah, Maverick likes this one too. Okay, let's take a look at CSX. And then we said home builders. IBP, BLD, DHI. Not yet. Could be really good. That's IV is elevated. All right, so let's forget about the home builders. We got plenty of really great candidates over here. Let's see on our tool. So first candidate was Aflac, not showing up on the scanner. CSX, not showing up on the scanner. This was in the middle of the day though. Travelers, I would go back. WRB. Nope. Uber. Okay, Uber is there. A little late for ideal entry, but not too bad, not too bad. And then Travelers is not here either. Let's see if we can get Uber to load. Okay. While we're waiting for that, maybe let's pick, because we don't want high correlation. So between Travelers, AFL, and WRB, we would only pick one of those. And then between Uber and CSX, we would only pick one of those. So CSX is not overextended like Uber is, so we would actually prefer CSX. So let me switch that scan over. Maybe you can see CSX. Okay, so I'm going to cross Uber off the list. Okay, let's like TRV. AFL. So between TRV and AFL, okay, between these two, wow. So this is already very elevated over here because it had this gap up and run after earnings. So what it's telling me is that the options here are probably pretty expensive. Even though there's this great potential for it to go higher, we're going to be paying a lot for it. And so it'd be a case of buying high and selling higher potentially. Whereas Travelers here, these are still nice and coiled up. They're very, very low. So you can see that up here is, right, in context, we're quite low over here. But we don't have that nice, as strong of a trend in Travelers, and we have some resistance up here. But this is pretty important. So I'm going to go with Travelers between these two. So let's take a look at WRB now. WRB, you can see that these are kind of in similar situations. Pulled back, rejected from an EMA50 right here, pulled back and broke out, and now is crossing up. Or so it crossed over that EMA50 and it's moving upwards. That is great. Here it pulled back and then it tested and broke through the EMA50. It didn't have this bounce back. And this one bounced between the EMA50 and the EMA50. Or sorry, EMA200 and the EMA50. So this one has a little bit better relative strength, but both do look quite good. So it'll come down to the options then. Which ones are more liquid, or which one provides a better reward risk ratio. So we'll take a look at those. And then unfortunately, this Gamma software doesn't want to run. So I can't show you guys the really cool things that we can do with Gamma. Oh, one other thing that I want to show you. Okay, so McDonald's. Let's see how McDonald's did, because we still have that outstanding example. Well, yeah, so it traded quite high today, actually, up to 314.22, pulled back, ended up closing at 310.93, which is now in the max gain zone, which is excellent. And so if we look at our option strat, we should be up versus yesterday. Yesterday, the bid ask was reasonably okay after markets, so we'll take the mark at 14%. So up yesterday was like 9%. So not bad. This is doing very well. And remember, we did get this one from Gamma Pocket. Gamma Pocket at 310, and or was it 3? It was 310, right? Or might have been 315. But the major one that we were targeting was the 320. But as long as we stay, we designed this one as a vertical spread. And as long as we stay above that 310, then it will create max profit, which was, I think, about 100%, right? Max loss, max profit. So yeah, we have a chance at a double on this spread. Okay. So Unfortunately, I can't get that Gamma software to load, so I can't do the same type of analysis on the opportunity on travelers versus WRB. Let's see, let's take a quick look at bar chart. I don't like their tool that much, but at least it's quick. And I also noticed their exposure, like their net exposure calculation is off. So it says net gamma exposure is only $564,000, which is, I mean, it's a huge spike versus everything else, but 500,000 is not a lot of exposure. But again, I noticed that their number is off. You know what? Let me run my old software. I forgot that I had that. I've been looking at the developer, the new stuff. Okay, WRB versus travelers. Okay. And I might as well take a look at the liquidity of the options. Travelers exposure at 270, 280, so a nice little step up. We closed at 268 and change, so a little bit of a move up to 270, 280. So I like that. Yeah, nice little step up over here. And then WRB, nice clear exposure, just like we saw on the, what was it, the bar chart. So bar chart, yeah, it has it at 72.5. It says that 560,000 exposure, which is nothing. But over here, well, 520,000. Okay, so I'm not terribly interested in WRB because we're not, assuming that there's good exposure on travelers. Because, I mean, if the market maker has to cover 500,000, that's not super meaningful. So we're not going to get a boost from the market maker. It doesn't mean that it won't go up, and it doesn't mean that it can't do it. I mean, Maverick still likes it, and Maverick doesn't care about gamma exposure. But I'm just looking for something like if I can get good gamma exposure and the market maker helping me move to that price, then it's just going to move that much faster. And speed inside of an option, if we're doing a simple call or put, then that is the speed of movement will translate into volatility, and that will boost up the gains that we get. So let's take a look at travelers. Travelers, 900,000 and 1 million at 270 and 280. Still not a huge amount, but better than WRB. So looks like travelers, but again, it will come down to liquidity. Liquidity matters more. So let's look at WRB. Okay, so we have monthly expirations. 72.5 is only $1 away, so I would go to the closest. Nice and liquid. And then travelers. Okay, we're looking at pretty liquid as well. Not as liquid as WRB, but okay. So this is 10%. 10% is okay, not excellent, but it might tighten up during market hours though. So if I'm playing WRB, And I have a gamma pocket at 72 and a half. Okay. And how many ATRs away is that? .88 ATR. We could do that in like 2 days, 1 or 2 days. Okay, and then how about travelers? Travelers, we had 270 and 280, if I recall correctly. Yeah, 270, 280. $270 is nothing. I probably won't make that much either. So it would have been better on the entry at an EMA8, but it's okay. Or EMA20. 280. 280 is probably a little ambitious. We'll probably get stuck in this region right here, probably near 275, 277 and a half because of resistance right here. So let's just call it 275. Not to say it can't go to 280, but it'll probably pause, at the very least pause around 275, 277 and a half before we go to 280. And that pause will create, it will erode because of time value, erode the option because of time value. So I'd rather make that quick gain, and then if it does chop and it still looks good, then we could go back in. So let's just say 275. Okay, and that is 1.3 ATR away. So that could take like a week and a half. Let's call it 2 weeks to be conservative. So already I'm probably favoring WRB just because one, it's more liquid, and two, it could hit that target in just a couple days versus 1 or 2 weeks. But let's just assume this thing can do it in 2 weeks, say next Friday. You can get to 275. Let me make sure you guys aren't asking me questions. Sorry, I got lost in this. RKT's broken out the top side. What about WRB? We're looking at it. How do I decide how to take trades based on Maverick? You're watching me. Both of these were Maverick suggestions. Arrow color on Maverick is just a direct, orange just means exit, and green and red are entries. Red just means I have both coils. So if it's red or maroon, then that means both coils are nice and coiled up. That means implied volatility really is low, and I can get favor. So basically the options are relatively cheap. And if it's green, then only one of the coils is ready to go. Okay, so let's see. Travelers. If this happens in 2 weeks, then theoretically, we'd have to go pretty far out the money to get a decent reward risk, and then it becomes really illiquid. So even right here at 280, right here, that's 45 cents apart. Theoretically, it could go to $2.60. So even if I could get it at say $1.75, that's like 85 cents. No, $1.70. That's like 50% in a week and a half or 2 weeks, which is not bad. I mean, it's a good profit. I just think we could do much better on WRB. Okay, so if we did WRB and just we said we could do it in 1 or 2 days, let's just give it to the end of this week. So we'll give it 4 days. And to reach the 72 and a half, so $1, so 0.94. Okay, so it does not, we're not giving it a lot of room. So probably it's going to get, I gave it four days, so that's the time decay is going to hit it a little bit harder because our target isn't that high. But here, the at the money, okay, so if we could get this at, say, $1.30, make 35 cents on $1.30, that's like 25-ish%. A little over 25%, but it's only in a few days, not 2 weeks. All right, so if I could do 2.5 times that, all right, so then that would be like 70 or 80% compared to the 50-ish% that we saw on TRV. But I would want a better reward risk ratio. This is no good. You see that this only goes up to 59 cents. And if I pay 45, well, that's 14 cents on 45. That's only about 30-ish%. That's better than this, but not by that much. And what if you can't get at 40 or 45 cents? What if you get at 50 cents? Then it's a terrible return. So more likely would want to go a little in the money here. But then the bid ask is terrible. Actually, the only one that is good is at the money. So at the money, so let's assume you could get it at $1.30 or $1.25. We'll just be a little more conservative and say $1.30. Then it goes to $1.65. That's 35 cents on $1.30, and that's 27%. That's not bad. But if it can get there in just 2 days, so let's say Tuesday, Wednesday, now we're talking $1.70. Is that it? Yeah, not that much better. $34.35. Expiration's a little too far off. Otherwise, I would also consider a debit spread. All right, so I'd be willing to do, say, one contract of this. All right, small money, because the potential, the reward, just call it 30-ish%, whether it happens in 2 days or 4 days. All right, it's somewhere between 27 and 34, 35%. So we'll just call that 30%. Okay. And then if I want a 1-to-1 reward risk ratio, then I would only be willing to lose 30%. Okay, so 0.7 times 1.3. We want to value this thing at around 90 cents. Okay, so it's $70.84. It doesn't give me a lot of room. Basically, back to the EMA8. All right, that's not too bad. And so given that we have the EMA8 right there, I would move it down, basically down just below the MA50 right here, that green line. So I have to be willing to take a little bit worse than 1-to-1 reward risk ratio, which is okay because the probability should be much higher than 50%. So for it to pull back down to hit my stop, I have to get through the EMA90, the EMA8, and the MA50. So I'll just call this 70 and a half, $70 and 48 cents. I like slightly oddball numbers for my stops. Yeah, that's a decent trade. So how much exposure? We have about 500,000. 500K exposure, gamma pocket. And that's what we're targeting in the short term. We think we can get there by the end of the week. Okay. And you know what? I wouldn't want to enter it right where we are right now. I only want to enter it if this pulls back, just say to the MA100. So that'll give me slightly better entry. Okay, and that MA100 is at 71.25. So we will evaluate this for tomorrow. Tomorrow is 20th. So if it goes down 30 cents, 31 cents, then this should be roughly $1.10. Okay, so I'll put in an order for $1.10 on this. Now, this is not a trade recommendation. I'm going to take the trade, or at least put in the trade order, see if it gets filled. But again, this is the free channel. This is not one of my services. This is not an official trade alert or anything. So if you decide to take this, just take it at your own risk. Take baby trade, just like me, just one contract. Okay, we're not putting huge money on this. This is an exercise to see how it performs, and we base this on one. What did we do? We looked at the entire market. So the market looks weak. We found a sector that was strong to the market, that was increasing in momentum. Then we took one of the top stocks inside of that sector. It was exhibiting strength to the sector, and it was in an uptrend by itself. And Maverick was telling us that it was a good entry, and it has a gamma pocket, although not a very big gamma pocket. So we have odds stacked in our favor, and I want to get in possibly on a pullback. So this is an exercise in seeing how all of these pieces come together to give us a trade and a trade idea, and then trade timing, and then this is the trade execution. So this is almost the whole plan, right? All that's left is the management, and actually I showed you the lion's share of the management as well, which is basically if it trades sideways, or sorry, let's go back over here. Okay, if it pulls back below 70.48, by Friday, we're going to stop ourselves out. And we are going to expect a slightly larger than 30% loss if that happens. Probably 45%, because we did pull this a little bit lower than what we had originally drawn. And then if we hit our target, then we're going to expect a roughly 30 to 35% gain if this hits the target by Friday. And if it does neither, if it stays somewhere in between by the end of Friday, then I'm just going to close it. I'm going to time stop myself out, and that it'll either have a less than 35% gain or less than 40, 50% loss. Okay, so that's the management. So I gave you a complete trade idea today, or an example of a complete trade idea, how I look for what the considerations that I'm looking at, the overall market conditions. What you notice that I didn't do is hey, let me scan for Mavericks, and Mavericks says go long on WRB, bam, let's put in that trade. That's not what I did. We did a whole bunch of stuff before we even looked at Maverick, right? So don't take a trade indicator, an entry just because it shows up. You got to look at a lot of other stuff in order for that idea to be validated. All right. So hopefully you guys, I went a couple minutes over. Hopefully you guys learn quite a bit and get to see the whole process. So the trade that I put in was one contract. Okay, this is just a demo, so it's only one contract of WRB 19th of September expiring 72.5 call at a limit price of $1.10 because I want to get it in at a pullback. And again, that's not a trade recommendation. This is just me showing you how I analyze and come up with an idea, look at the timing, look at the execution, look at the management. Okay, so if you decide to trade this, trade it at your own risk, and please, small size. Okay, we are not in a super high, great environment, right? We don't have the SPY moving up with us, but we do at least have the sector breaking out. Okay. All right, guys, we're a little over time, so we're just going to wrap up right here. Thanks for hanging out with me, and I will see you all tomorrow. Bye, Lise. You're very welcome. Glad you found it helpful, C. Fazio. All right, bye, everyone. I'll catch you guys later.